Boom! What's going on, guys? 360 Digital Closing Bell Daily Energy Market Summary here on this gorgeous Wednesday, October 21st, 2020, episode number 142. We are coming to you from an undisclosed location here in Denver, Colorado. As always, I'm your humble correspondent, Michael Tanner, joined by the executive producer of the show, the purveyor of the show, the director and publisher of the world's greatest website, oilandgas360.com, and international man of mystery, Stuart Turley. How you doing today?
It's a beautiful day in the neighborhood, but we are rack, packed, and stacked.
We got a busy day, and we got a lot of different stuff in the international oil markets that are really moving. That WTI oil price Stu's going to cover some Libyan stuff. We've obviously got crude oil inventories on the U.S. side to cover. Baker Hughes drop earnings, actually not that bad. Equities markets continue to go like the stimulus. But first, guys, just subscribe to this YouTube channel if you haven't already. It's the best way to stay up to date on all of our daily energy market summary stuff. Hit that pesky subscribe button. Do whatever makes the algorithms go nuts. If you send me a picture of you subscribing, I will send you all of the Entercom swag that you want. Just tell me what you want. We've got bumper stickers that say, do these rigs make my assets look big? I'm telling you, I need to get rid of these guys. Send me a photo of you subscribing, and we'll get you some free Entercom swag. As we move into the markets today, it really was a choppy day. We were up, down, really off a bunch of conflicting stimulus news, stimulus talks. SPY was pretty flat, only about 0.09 percentage points on the upside. Tech stocks were actually up the biggest 0.75 percentage point. Snapchat released earnings this morning, actually had some really good revenue numbers, so they're really able to turn a corner. To give you an idea, 3 years ago, Stu, Snapchat was a $5 stock, currently trading around 35 right now. So whether or not we even know what they do as a business model, somebody's spending money there. So that's really what rose tech stock there. Dow Jones down about a tenth of a percentage point, 28,263. Crude oil side, not a good day, about $1.50 on the downside, about 4 percentage points down to 40 even. Really, Stu's going to cover this Libyan oil stuff. DOE inventories were expected to actually be a little more bearish than they were in terms of we saw a million barrel draw, which we were expecting a little bit of a build. So that's, I think, part of the reason why when you saw the pit, 830 drop, if you were trading crude oil right there, you really saw those algos struggle with what was happening. API expected a build, we saw a draw. So kind of conflicting news, but then that Libyan oil news came in about 25 minutes later, really rolled that oil market back over and really down to what we're seeing, which is about $40 even. Back into the curve again gets hit. So when the back end of the curve gets hit just as front as the front month, down about 3.5 percentage points, that's when you know it's that Libyan oil news, which is that long-term supply issue really coming in and hampering those oil markets back into the curve, trading at 42 flat right now. Natural gas, woohoo! We're throwing a party above $3. Who would have thought we'd be throwing parties for $3 natural gas? But it's the oil and gas markets we're living in today, up 4 percentage points. $3.02, really off the back of some colder weather that's moving in. And tomorrow we're expecting an even smaller draw of about 39 BCF cubic feet in terms of natural gas stocks. We saw 46 BCF last week. So as we continue to chunk that off, back into the curve was only up about a percentage point to $3.10. So, I mean, that's the craziest part here. We've got front month now above $3, but that back end of the curve still isn't even at that 320 mark, Stu, that you think it's at. So just some really wild factors, and that's partly why this colder weather has been affecting that front month contract, and you're really seeing those differentials squeeze in there. When we move over to our XOP contract, which are E&P securities, they were down about 2.25 percentage points today, 42.59. OIH Oilfield Services was actually down about 1.5%, but not due to the fact that Baker Hughes was up actually 3 percentage points off the back of some really good earnings. When we move over to what's going on in some of our individual stocks, Parsley Energy, after getting sold, they're down 8 percentage points, about at $9.77. Northern Oil and Gas was down 6.5 percentage points, $4.75, and High Point Resources down 20 percentage points, 13 cents. Still got a great website, regardless of what their stock price is doing. When we look at the upside here, Indonesia Energy Corp up 6 percentage points, $5.30. VOC Energy Trust was up 20 percentage points, and Tensco Gas was up 63 percentage points, $1.59. Some other big movers on the day, Comstock Resources was up 4.5 percentage points after a 250,000 block trade. We don't know quite who the trader is. My guess is it's Jerry Jones. Why not? He owns about 65% of that company, just continuing to chunk more and more. But why not buy more Comstock Resources? They're a Permian, or they're a natural gas player specifically. So other numbers on the upside, we saw Ring Energy have a good day, 5.5 percentage points. We love those people over at Ring. We've actually got I want to tease this right here, Stu. We've got their new CEO coming up.
Yes. Paul, we are looking to interview him next Tuesday.
That'll be really good. We'll get you all of those details. Kind of speaking of Stu, international news desk has been crazy today, moving oil markets. What do we got?
I pulled all my hair out today. Argentina
Was that today?
Yeah, well, all right.
Or,
Quit being mean.
about 6 years ago?
Oh yeah, no, it's actually since I'm on Social Security now. Hey, Argentina is going through and they are putting in $5 billion into natural gas because they want to become energy independent. All of these things that we're facing right now around the world are striving for countries like Argentina to get energy independent. Good story on the news desk. Next, we went from Argentina up to Canada. Suncor, a Canadian company, this one's going to make your head spin, goes over to the North Sea, and they have really got some things. They've got a divestiture of 30,000 barrel a day Golden Eagle area on the UK side of the sea. It looks like it's valued at 26 cents per share, or about 400 million. That there's another little tidbit in this article on the news desk, and that is ExxonMobil has begun processing its divestiture of the UK field, and Eni is divesting itself of a production vehicle in Norway. A lot of stuff going on in the North Sea,
which is interesting because I think one of the theses that specifically we've been talking about on the podcast, and this is where we're the first to admit when we're right, but we're also the first to admit when we're wrong. We thought the North Sea and some of this offshore stuff was going to be big. Clearly, these majors don't think so.
Well, the stuff going on in off Angola and Africa is still big, and so those are being selectively, and then the Mediterranean, Club Med. Speaking of Club Med, around in this area here, we have our buddies over to Iraq. Iraq 2 weeks ago or 3 weeks ago, we ran a story on the news desk. They assigned a new CEO to their company that they're now coming out with next year. They're bringing back the Iraq oil company. OPEC has a gigantic newspaper to whack Iraq in the nose. They are the number one person going against all of the quotas and everything else. They have the capacity to go up to 7 million barrels per day by 2027. And who can trust that they're going to abide by any rules whatsoever? It's an interesting twist on that. Next speed box going around the corner here is Libya. And I believe this one really had a big effect on the oil today. Is that what you were talking
it's the
about?
biggest news on the oil market today in terms of if you're trading crude oil.
There's easing the blockade of Eastern forces put 90% of the 100,000 barrels per day back online. They have 100,000 barrels per day coming up on October 24th. The power is coming back on in the Abu Atefel. Sorry, yep. I'm from Texas. I don't know if that field right, his name is correct, but it's coming back online on the 24th, even ahead of what we thought it was. So when you take a look at the high-end graphics that our graphics department has, there's a lot of oil coming from that particular field coming in. So.
Yeah. And they have the ability, what it looks like if you read this article, they've got ability to even turn those spigots on even more. This is only even a small chunk of what they could bring back online.
Exactly. And you and I had talked about Turkey several months ago coming in and helping them because in 2011, Muammar Gaddafi had shut this whole thing down and it had been gradually coming back online thanks to Turkey. All right, last teaser I'm going to give you. Hold on to your seat. Club Med again. You can see by our wonderful graphics here, I'm doing some story and some research on all of these are Chinese ports that have been invested heavily in by the Chinese government in order to help in shipping and in energy. I'm trying to run that thing down. Nothing like having an interference with Club Med in the Mediterranean. So busy.
And as always, we appreciate your spot on graphics that you throw up. You would have done great as an old time sailor with just those room of maps, just moving in there. I want to go back to this Libyan story because, as Stu mentioned, there's going to be oil production coming back online in Libya. Specifically, we've got this new Abu Atafil. There was my shot. I think I did even worse than Stu, and I'm not a Texan, so that's another 70,000 barrels. It just, really the story of is that road back to 1 million barrels. What's that look like? How quickly can they get that? I mean, when we look at both the front and the back end of the curve now for crude oil, down 3.9 percentage points for that front month, 3.2 for the back end. So clearly, it's these long-term supply issues that oil markets are looking at. When we look at crude oil inventories, it was actually pretty decent. We actually saw about a 1 million barrel draw. We were supposed to see about a 500,000 barrel bill, but we actually saw that 1 million barrel draw down to 488 million for total stocks. Weekly production was down 600,000 barrels, but remember, that's still counting some Hurricane Delta stuff. So really, it will be next week to be interesting to see what bounces back. 9.9 million barrels on that. Refinery utilization continues to fall. Last week is the first time we saw it under 75, which is usually a pretty good sign of the health of the crude oil and refinery market. We saw 72.9. Again, we're seeing a lot of the fallout from the LNG shutdowns at Sabine Pass. There was a force majeure that's still in effect actually right now that's probably causing a lot of that 75 blow. We're talking about 72.9. Gas prices are out 215. So I mean, bullish, bearish data. Like I said, prices have sort of been ripped. We're still at that nice $40 band though. On that point, the other interesting news piece that dropped today was Baker Hughes. It kind of finishes our big three in terms of oil field services. To be honest, I like their earnings, statement. We look at they ordered their 5.1 billion, which is up 4% sequentially and only down 34% year over year. So they did, in terms of month, quarter to quarter, Stu, they're up 4%, which I would have thought for oilfield services quarter three you get hit harder than quarter two because on quarter three you'd be able to unwind these contracts. Not true. They saw a 4% increase, which I like. According to my favorite non-GAAP adjusted earnings per share, they did actually turn a profit, which it's not true, but it just makes me laugh every time. GAAP loss per share was 25 cents, and they had about 29 cent adjustment. Operating loss about 49 million, which is actually up 6% year over year. I didn't see this, Stu. Speaking of earnings, I didn't see this in a oil and gas presentation, but I did see this in another in another earnings call. Instead of losing money, it's now called free cash outflow. Free cash outflow. That's a great way to describe how much you're losing money. So we'll start using that one, and it'll be interesting to see if that creeps its way back into the oil markets. The other thing I'd be remiss to say is, I think the fallout from the Pioneer Parsley deal. We saw Scott Sheffield come on. Both Bloomberg this morning and CNBC yesterday, and talk about a couple things, Stu. I thought there was some interesting numbers. One, he thinks there's only 4 investable companies, and he thinks they're over 10 billion. He thinks they're EOG, he thinks it's ConocoPhillips, he thinks it's Hess, and he thinks it's Pioneer. He out of his mouth, there's no good companies left to purchase, and everybody else is going to left sort of fending from themselves. He kept using the word deleverage, which is probably his IR guy's favorite term for bankruptcy. It's just kind of, he keeps saying all these companies need to deleverage. What do you mean by deleverage, dude? You can just say it like you're a billionaire. Like, we don't need you to sugarcoat the fact that there's probably half of these companies sitting in the Permian that should probably just be bankrupt. But instead, we have to hear about they need to deleverage. So just read between the lines, people. He's saying people need to go bankrupt. Do you agree with that list, Stu? He's basically saying when it's all said and done, there's only 4 investable companies that are left in terms of long-term growth.
I'm going to call bullcrap on that.
Okay. Yeah, I mean, and what's funny is at the end of the at the end of the interview, I think one of the big things is what are the super majors going to do? And if Exxon or Chevron decides to get in on the Permian, well, now pretty much the company to buy is Pioneer. And they pose that question to Sky, hey, is you setting yourself up to basically merge or get acquired by Chevron or Exxon and create the Permian player? He didn't say no. I'll tell you that much. He basically said he's going to do whatever are in the shareholders' best interest. So basically that means they even see consolidation on their end. So it'll be interesting to see. Their stock was actually down, started today at about $84, currently trading about $79. Pretty busy day, Stu. We missing anything?
I think our buddy over there is definitely wrong. I think there's money to be made in the energy markets, especially with
You
good
said energy
management.
markets. Are we? We're talking oil and gas,
I,
Permian Basin.
my mistake. Yes, there is money to be made,
Okay.
and I'm backing up my comment.
No, and to be honest, if there's anybody who I think, speaking of bringing on a company like Ring Energy, there's somebody who's taking a different approach to the Permian, and that's going straight conventional. So I think it's, talk about a company that's kind of taking the opposite approach of the unconventional share. We'll have an opportunity to talk with them. I'm sure this deal will come up, and you'll have to talk all things M&A. But it looks like we've cleared everything on the news desk. So with that, guys, we're gonna go ahead and get out of here and let you guys get back to work. For Stuart Turley, I'm Michael Painter. Thank you for checking out the Daily Energy Market Summary, episode number 142, here on this October 21st, 2020. Nice Wednesday. We will see you guys tomorrow for another live daily show, and always available on the oilandgas360.com.